Hey guys, Boris Awesome BT Forex. Welcome to our Forex Daily Techniques for 10/16/13. As always, trading foreign exchange on margin carries a high level risk and obviously for all investors. I ask you to look at the disclaimer very carefully, understand all the risks associated with trading margin, and seek advice from an independent financial advisor if you have any doubts. Well, currencies remain in a stall because the situation in the U.S. continues to be unresolved. If we look at the euro, we're basically just above the 35s. Basically, the very, very key levels in the euro, 34.50 to the downside on a strong pro-dollar move if you have a resolution and a complete sort of positive knee-jerk reaction to the U.S. budget process. The failure to do so and a threat of default pushes us all the way to 36.50, which is the key level. So a break of 36.50 really takes us to probably 37, maybe even 37.50. A break of 34.50 definitely tests the 34, maybe even comes into 33.50. Until then, we're just in this middle range, awaiting action. On the yen side, it's holding up relatively well given the, I think, turbulence that continues to occur on the U.S. legislative side, and it's sort of giving it the benefit of the doubt as 98 continues to hold. But a break here, I think, in many ways, if we don't have a deal, one of the sharpest reactions could probably be around this currency pair because that would have massive risk aversion flows. And if you look at the daily charts, what you basically see here is a rise to 98.50, which still continues to make a possibly lower high and a pushback down if we do have a negative resolution. The support here, 97 first, or 90, basically 96.50, 97 as the first level of support, and then a complete breakdown would take us all the way down to 94. So yen to the downside looks vulnerable. To the upside, the takeout level here is 99, and that puts us square up into 100, which would put us into a double top test right over here. Aussie is holding up best, and it continues to sort of flutter around here. Let me just find the Aussie. Flutter around 95, 95.50. Again, positive resolution here could push us all the way through towards 97 level. In many ways, I think a strong resolution on the U.S. side, that is, we avert the budget default, we avert debt default, is actually very positive for Aussie because it's positive for risk and certainly positive for Aussie yen, which is my favorite way of trading the deal no deal structure. Let me see if I can find the Aussie yen. Aussie yen is holding up at these 94 levels, and a deal I think puts us straight up into the 96 level target as you get a big zoom in dollar yen and probably some supportive level in the Aussie dollar. And lastly, cable just continues to tread water. This 160 level is starting to percolate right now. We're fronting right now about half an hour in front of the UK labor data. That could be a small boost to cable, especially if it comes in positive, because labor data is what the BOE has been targeting off of its monetary policy. So anything positive on the labor side will be viewed as positive pound. It could push us perhaps even to 60.50, maybe to 6100. But for the time being, cable is still in a very distributive mode, and it's a seller rallies mode as it tries to hit every one of these upper levels. Having said this, though, the fact that we've managed to hold 59 for about a good 6-7 days suggests that there is some serious support here at the 59 level, and we could get a counter trend rally that could be more meaningful. That is, perhaps 61, maybe even 62 for a test of the double top. So, the very, very near term, assuming the data is positive, tends to have a bullish cast, but a longer term still is distributed in cable. That's how the night shapes up. The support shots for